We got some shocking home sales data for the US coming in at completely different numbers than analysts were expecting. So today we're going to dive into some of the data, see how it compares to last year, kind of see where the trend is going. Are we expecting home sales to start declining for the rest of the year? What's the expectation with the median sales price as we're talking about a potential economic slowdown in the near future? And there's a lot of fear-mongering going on out there. So today I just want to take a look at the hard data and give us an idea of where we are compared to previous years and hopefully give us an expectation as to where we're going. If you're new to the channel, my name is Ian Phillips. I'm a realtor in Southern California and I am obsessed with real estate data, so I am uploading weekly videos diving into some housing market data, talking about city specifics as well. So if you're interested, subscribe for more and let's get on with the video. So existing home sales came in at just over 4 million homes sold for the month of March. Now we are going to compare that to new home sales, and the way they differ is new home sales is essentially homes being sold by the builder that are either newly constructed or have not been constructed yet. So that'll give us a great idea as to where we are compared to last year, and new home sales fluctuate completely differently to existing sales. So first off, last month there were 4,260,000 homes sold in existing home sales. So we are down over 200,000 in the month-to-month data. And let's take a look at how it compares to March of last year. So March last year, 4,200,000 homes sold. So we are down almost 200,000 homes from this time last year. And that is a pretty decent number. You're talking about 5% net loss in number of homes sold. And in all honesty, that isn't really much of a surprise. Now we are kind of expecting inventory to increase for the rest of the year. So that might spike the number of homes sold because, as we all know, inventory has been a major factor for why not many people are buying homes right now, coupled with the unaffordability issues that we're having in a lot of real estate markets. So let's take a look at the chart, see how it's sort of been trending for the last few years. We'll take a look at some historical data back to the year 2000. And as you can see, basically since 2022, number of home sales have kind of been fluctuating between 4,500,000 and 3,800,000. So I'm optimistic this can be the beginning of an uptrend, and I expect we're gonna at some point go back into this normal market where we were getting over 5 million homes sold every single month for multiple years in a row. And as you can see, this was sort of the start of the pandemic crash, and then we saw interest rates plummet down to 2.5%. And home sales skyrocketed all the way up to almost 7 million homes sold in a monthly period of time. And that kind of stayed true up until the first half of 2022, when interest rates had their largest spike and fastest spike in history. We went from 2.5% to 7.5% in like 6 to 8 months or something. And that caused the number of people buying homes to plummet. We went all the way down to 3,800,000. So that is a huge drop from where we were in 2020. And my expectation with this is we're kind of just going to hover around more of a neutral market until we can get some sort of stabilization in the economy and hopefully get mortgage rates back into the fives. I know that is a big push that is happening right now, but if we look back to 2008, right before the financial crisis, we didn't really hit those levels of 7 million homes getting purchased in a month. And then that also plummeted all the way down to 4,400,000. So in actuality, we kind of hit the exact same levels as where the financial crisis started to recover. So I don't know if we're in this situation where we've sort of hit peak unaffordability issues in the housing market, and now we can start making a shift back toward something more neutral where we can get home sales back into the 5 million every single month. And I'm optimistic that that can happen, that we can get some more inventory, that we can get mortgage rates back to where they were. But I don't believe we're trending into a market where we're going to have 15-20% appreciation every single year like we've had basically since 2020. I think it's just going to be more neutral. I think we're going to have 3% appreciation in my market. We had that last year. In Southern California, the real estate market is very city dependent right now, and also location in the city. If you take Los Angeles, for example, prices have basically done nothing since 2022. They are flat for the last 3 years. We had a correction in the second half of 2022, and they've kind of just been like slowly trending up a little bit. And then you have pockets of LA where homes are selling for less than what they were purchased for in 2022, and then some areas where homes are up 15% in that same period of time. Where I live in Orange County, prices are up 20% since 2022. And if you look at the market as a whole for the entire United States, prices did peak in 2022. So that's pretty interesting to compare. I do think we are moving toward a market where it's very location dependent. In my opinion, areas where the top 10% live and where the top 10% can buy will probably outperform the rest of the country. If you look at savings amounts, the top 10% have stacked an enormous amount of cash relative to everyone else. So now we're going to take a look at new home sales, which again is from builders. And this is a completely different looking chart compared to existing home sales. New home sales had a huge rally into the 2008 financial crisis, where you had 1,200,000 people buying from new builders every single month, and then it just fell off a cliff. It got more than cut in half. In fact, it's almost a quarter of the amount of people buying homes in 2009, in 2010, in 2011, in 2012, compared to that huge rise that we saw in 2006, 2007. So we're kind of in this slow uptrend. Again, we had a huge rise when we were coming out of the financial crisis, and then we got the pandemic, which caused interest rates to plummet, which caused more people to jump into the housing market. And basically, in my area, home builders didn't even have enough inventory to keep up. People were buying homes that hadn't been built and hadn't even started to be built. So they were buying a house that was going to be ready in a year or a year and a half. And I think we're more of a normal market right now. 700,000 homes were purchased in the recent data. We can take a look here, 724, and compare that to March of 2024, where we had 690,000 homes purchased. So we are up year over year in terms of new homes being purchased. So that's optimistic news for the housing market. And again, I do want to reiterate that there is a lot of fear-mongering happening right now. People are uploading videos talking about a 50% housing crash. There's a guy on YouTube, a lot of subscribers. He's been doing it for the past 5 years. And his entire goal is just to get clicks and views, because that's how he makes his money. He uploads videos scaring people into not buying a house because he gets a lot of ad revenue from it. And then he sells a subscription to an app. And there's a lot of people who post videos like that because they know it's going to get views and boost their ad revenue. So do keep that in mind, that for some of these YouTubers and influencers, they are basically relying on scaring you in order to increase their income, because everyone knows fear-mongering videos produces a lot more views. So that was some of the housing data. Yes, we are slower in existing home sales month over month and year over year, but we are increasing the number of new home sales month over month and year over year. And 4 million homes sold in a monthly period of time is definitely not a housing crash. We're 5% less than where we were last year, and it's no surprise given the economy that we're seeing right now. There's a lot of uncertainty going on. I think if we get mortgage rates to drop in the second half of the year, that's going to change things a lot, because there's a lot of buyers on the sidelines waiting for low sixes, high fives to jump back into the market, because a 1% interest rate drop changes your monthly payment pretty substantially, especially if you are a low down payment buyer. So that was it for the video. If you enjoyed, subscribe for more. And again, if you're looking for a realtor in Southern California, reach out. I'd love to chat. We can go over a game plan, talk about what markets you're interested in. I'll see you in my next video.